The Indonesian rupiah has taken a hit in recent days, plummeting to 16,428 rupiah per US dollar. This significant drop has sent ripples of concern throughout the nation. Is this a temporary blip, or a sign of deeper economic woes? The rupiah's decline is a complex issue with both internal and external factors at play. Understanding these factors is crucial to gauging the severity of the situation and predicting the future trajectory of the Indonesian economy. The Indonesian government has assured the public that the situation is under control. However, the recent market volatility and the weakening rupiah have left many Indonesians feeling anxious about the future. Indonesia faces its own set of economic challenges. A growing fiscal deficit is a major concern, putting pressure on the rupiah and raising questions about the government's ability to manage its finances effectively. Furthermore, Indonesia's reliance on commodity exports makes it vulnerable to global price fluctuations. Recent drops in coal prices have impacted export revenues, further exacerbating the situation. These internal factors highlight the need for structural reforms to strengthen the Indonesian economy and make it more resilient to external shocks. Diversifying the economy away from its dependence on commodities is crucial for long-term stability. Indonesia is not alone in facing economic challenges. Geopolitical tensions, particularly in the Middle East, have created uncertainty in global markets, impacting emerging economies like Indonesia. Additionally, U.S. trade policies have created a ripple effect across the globe, disrupting trade flows and impacting currency markets. The ongoing trade war between the U.S. and China adds another layer of complexity to the situation. These external pressures underscore the interconnectedness of the global economy. Indonesia must navigate these choppy waters carefully, seeking to mitigate risks while capitalizing on any emerging opportunities. The Indonesian stock market has reacted sharply to the recent economic uncertainty. The benchmark Jakarta Composite Index, or IHSG, experienced a dramatic plunge of 7.11%, triggering a trading halt. This drastic measure reflects the panic and fear gripping investors. The trading halt, while intended to prevent further losses, has also added to the uncertainty. It highlights the fragility of the market and the potential for further volatility. The market's reaction is a clear indication of the seriousness of the situation. Restoring investor confidence will be crucial for stabilizing the market and preventing further economic damage. Section 5. Bank Indonesia to the rescue. The call for stability. In response to the unfolding economic situation, Bank Indonesia, the country's central bank, is facing pressure to intervene. Experts at the Institute for Economic and Social Research, or LPEM, at the University of Indonesia have recommended that Bank Indonesia maintain its benchmark interest rate at 5.75%. This recommendation aims to strike a balance between controlling inflation and supporting economic growth. Keeping interest rates steady, according to LPEM, will provide a sense of stability and prevent further capital flight. Bank Indonesia's next move will be closely watched by investors and businesses alike. A measured and well-communicated approach will be essential to instill confidence and mitigate further economic turmoil. Section 6. Government action, stimulus packages and asset utilization. The Indonesian government has sprung into action, announcing a series of measures aimed at stimulating the economy and alleviating the hardship faced by its citizens. The Ramadan Lebaran stimulus package, timed to coincide with the holy month of Ramadan and the Eid al-Fitr celebrations, aims to boost consumer spending. This package includes discounts on airfare and toll road tariffs, encouraging travel and boosting the tourism sector. Furthermore, the early disbursement of holiday allowances, or THR, to millions of civil servants injects much-needed cash into the economy. In addition to the stimulus package, the government is exploring innovative ways to utilize confiscated assets. Member of Parliament Marwarar Sirait has proposed utilizing land seized from corruption cases for the 3 Million Houses program. This proposal, if implemented effectively, could address the housing shortage while generating economic activity. Section 7. KEK Development, a beacon of hope. Amidst the economic uncertainty, the development of special economic zones, or KEKs, offers a glimmer of hope. These zones, strategically located throughout the archipelago, aim to attract foreign investment and boost specific sectors of the Indonesian economy. KEK Bang in central Java and KEK Nongsa Digital Park in Batam are attracting significant attention. KEK Batang has secured a massive 16 trillion rupiah investment from Fujian Province, China, while KEK Nongsa Digital Park is positioning itself as a hub for technology and innovation. The success of these KEKs will be crucial for Indonesia's long-term economic growth. They have the potential to create jobs, boost exports, and drive technological advancement. However, ensuring transparency, good governance, and environmental sustainability within these zones is essential to their success. Section 8. Navigating the global stage, trade agreements and partnerships. Indonesia is actively pursuing trade agreements and partnerships to strengthen its position in the global economy. The country is in the process of acceding to the Organization for Economic Cooperation and Development, or OECD, signaling its commitment to economic reforms and international cooperation. Negotiations for the Indonesia-European Union Comprehensive Economic Partnership Agreement, or IEU-CEPA, are in their final stages. This agreement holds the promise of increased trade and investment between Indonesia and the European Union. Furthermore, Indonesia is close to finalizing a free trade agreement with the Eurasian Economic Union, opening up new markets for Indonesian goods. These agreements, if successfully implemented, can provide a much-needed boost to the Indonesian economy. Section 9. Indonesia's Economic Outlook, a Time of Uncertainty. The Indonesian economy is at a crossroads. While the country possesses strong economic fundamentals, internal and external challenges have cast a shadow over its short-term prospects. The weakening rupiah, the stock market volatility, and the slowing economic growth are all causes for concern. The government's response to these challenges will be crucial. The effectiveness of its stimulus measures, its ability to attract foreign investment, and its commitment to structural reforms will determine the trajectory of the Indonesian economy. Despite the challenges, Indonesia has a track record of resilience. Its young population, its growing middle class, and its abundant natural resources provide grounds for optimism. Navigating the current economic turbulence will require prudence, decisiveness, and a commitment to sound economic policies. Only then can Indonesia emerge stronger and more prosperous.